Perfect. My bad. I turned the mic on. What's good, guys? Welcome to my podcast, right? We lit. Yeah, we finna get this joint lit. Yo, I love seeing everybody's faces. Y'all look amazing. Hope everybody's having a beautiful day. Happy holiday week for y'all. We go into an interesting season. Yo, I'm honestly super excited. Yo, if you're lit, put I'm lit in the chat. Yo, if you're excited for today, if you're happy to be alive, if you're ready to get paid, go get some liddies in the chat. Let's get some liddies in the chat. I want to give a huge shout out back to Mandy. We were supposed to do this last week. There's some issues last week. So we got it this week, and I'm honestly so excited and grateful to be here with you guys. So huge shout out to her, C10, chairwoman, loading. It's done, right? So guys, I'm really excited to be here with you guys. If you guys don't know me, my name is Justin Saini. I'm 25 years old. I'm a chairman 10 here with I Am Mastery Academy. What else? I'm a co-creator, co-founder of Steady. Super cool, right? Today what I really want to do is I really just want to get you all on the charts and, give you guys some stew. So, really the goal with today is I know we got people from all different backgrounds. We have some people that, this might be, one of your first few times, in the business. This might be your first time in the business. I actually signed up somebody today. I actually got to call her and make sure she gets on this joint. No cap. I just reminded myself to do that. But some of you guys might be ranging from different times in the business. Some of y'all might be brand new customers, right? Some of y'all, you might be brand new. You haven't really traded yet. You might be a beginner. Some of y'all might be advanced traders. Y'all been rocking with us. Y'all already know what the vibes are. So what I want to do is I want to be able to give you guys value for across the board. So my goal over the next few moments that we're going to share is going to be to, I guess, really just turn everybody up, right? So with that being said, this is right now. Let me just send this to the new people on my team too, because I signed up a ton of people just recently. TJ, yo, bro. I'm sorry, guys. I should have been done this. I'm doing this right now. All right, cool. So guys, what I want to do is I want to go over a few different things with you guys today. Maybe we'll hop into a trade. I'm looking at something right now. So we'll kind of see what's good. But what I want to do is I want to give you guys a good understanding of risk to reward, right? And I want to give you guys a good understanding of just a few little key things that have really elevated my trading game to the point where, we've been able to see massive success. So, I want y'all to be able to see the same level of massive success, right? So what I'm going to do real quick is I'm going to pull up, honestly, I don't even want to use slides today. Let's see. How do I want to do this? Let's do this. I just want to talk about risk to reward real quick, family. So for those of you that don't know what risk to reward is really, really simple. It's just, how much you can risk to potentially how much you can gain, right? I got a good little steady slides. I got a good little presentation for y'all. I'm gonna pull up these slides real quick. I'm not a big fan of using slides, but I feel like the slides make some things kind of easier for you guys to understand. So real quick, just give me a thumbs up if y'all can see the slides. Real quick, let me just get a thumbs up. All right, perfect. All right, perfect, guys. So what we're going to do is we're going to go over these slides really, really quick because these honestly don't really matter. I want to get on the charts and, start going crazy with it, right? I'm going to go over, so this week's a little bit slow in the market, but I'm going to go over some trades that, I'm going to unmute. So we went ahead and muted everybody. So what we're gonna do is we're just gonna go over this. So if you guys don't know what Steady is just a mobile app. You guys could download it. It looks like this. It's really nice. It's pretty. It's very attractive. I love it. I'm sure you love it too. Now, when it comes down to it, Steady's an app that's designed to help you guys get paid, right? Now, with Steady, it's really simple, family. You're gonna download the app on your smartphone, your iPhone, your Android, whatever it might be. And really how it works is myself and the team, we're going to be sending you guys trade ideas. So the trades that I'm taking on my personal account with my personal money, I'm going to be sending to you guys for you to take, if you decide you want to do so. Right. But, you're going to be able to grab, trade ideas relatively quick, 30 seconds, 60 seconds, and, really start cashing out. Now, there's some new features in the app. There's a risk to reward calculator. Calculator is super cool. How it works is, you being a new trader, maybe you being a beginner in this trading space. You might not know how to properly risk on your account, right? I remember when I first got started trading, I didn't know what the hell risk management was, right? I would just be, taking trades and, praying that it went up or it went down, right? Now, when it comes down to a family, what I want y'all to take away from this is when it comes down to using steady, it's like a 4-step system to using the calculator. The first thing is you're going to put the currency pair you're trading. The second thing you're going to do is you're going to put in the amount of money that's in your account. The third thing you do is you put in the amount of percentage of your account you're willing to risk on any given opportunity. And the last thing you want to do is put the amount of pips to stop losses. Now, after you put those 4 things in, you hit calculate. The calculator is going to tell you that, hey, it's going to tell you that, let's say Bailey, right? It's going to say, hey, Bailey, based on your $1,000 account, you're going to be risking $20 and you're going to be using this lot size on this specific trade, right? Now, when it comes down to it, this is cool because you guys will be able to get a trade and you'll be able to use the proper risk management right off the rip, right? Now, I'll tell you guys this. Risk management is key for 1, so you don't blow your account, and for 2, so you actually make money on your account. It's too many people that you're not actually making money on your account because you don't understand risk management. And the second person is they're losing money on their account because they're not understanding risk management. So that's super cool. And there's a little chat too. We'll be giving you guys updates, things of that nature. Now, guys, on steady, we're sending out like 4 trades a week, 4 to 8. Now you might be like, damn, that doesn't sound like a lot. Now, these are trades that are going the distance, right? Now, on steady, what we do is we do swing trading and intraday trading. Swing trading means we're catching trades that are going the distance, right? And we get paid as it goes the distance, right? Then we got intraday trades too. Those really just mean that you're going to get paid on in and out type movements, right? Now, there's going to be different types of trades. There'll be pending orders. There's going to be market executions. There's going to be live trading on live sessions. There's a whole bunch of different go live sessions you guys can participate in. My bad. I got this alert going off. There's a whole lot of live sessions you guys can participate in. And, it's really easy to take a trade with steady. Now, when you guys get a trade with steady in the app, it's going to give you an entry price, stop loss, and then a take profit 1, 2, 3, et cetera, et cetera. It'll tell you what type of trade it is. All you got to do is take the information from the app into your MetaTrader 4 or 5, copy and paste it. And, you're pretty much good to go from there, right? Now, when it comes down to it, these are the type of trades that we're taking. So here's a before and after. Here's one. There's another one. Every trade on steady is going to be either a pinpoint sniper entry with very small drawdown, or it's going to be a small stop loss. We don't experience like holding trades and, waiting for too long for the market to kind of show its hand, right? Every trade is going to be a sniper entry, right? We love these sniper entries. We told you to buy here, you buy here, the shit goes up, you get cashed out, right? Here's an NZD JPY trade. He said sell at 78,450, 78,450. There's an entry. Every trade is going to be a pinpoint sniper entry, right? Here's a GBP CAD. There's the entry, snipe, goes down, you cash out. Here's another trade, GBP JPY, snipe, it goes up, you get cashed out. Now, every trade on steady, like I said, it's going to be a sniper entry. We focus on a few different things. First thing being precision-based trading. Precision-based trading really just means catching the best sniper entries. The second thing we focus on is percentage-based risk to reward, right? Now, this is what makes steady different. Percentage-based risk to reward means that, instead of risking money and pips, we're risking percentages and we're focusing on risk to reward. Let me ask y'all real quick. We got 130 people in the chat. How many of y'all really and no hype or no cap, like how many of y'all actually can see yourself making, how many of y'all actually really want to make 6 figures trading? Like how many of y'all want to not clock in, not clock out, not have a job, not have a boss, not deal with no bullshit, and actually trade and consistently make money and live your life from trading? All right, cool. I see the chat's going crazy. Now, for you to do that, you got to change the perspective of how it is that you look at the market, right? And really what I mean by that is if you treat this as like a as a hobby, it's going to pay you as a hobby, right? If you treat this as a profession, it could pay you as a profession, right? I don't know nobody that's actively participating in their hobby and making millions of dollars from their hobby, right? No cap, right? 9 times out of 10, like, yo, some people, they like to fly drones as hobbies. That's cool. Some people like to go bird watching for hobbies. That's cool. 9 times out of 10, that shit's costing the money. It's not making the money, right? So what you got to look at is you got to stop treating this business as a hobby. You got to stop, watching the birds when it comes down to the business. What you really got to do is you really got to tap in and see what it is that you really desire out of the business, right? So, yo, first things first is this, is I don't want you guys to focus on money or pips. I want you guys to focus on percentages of your account and risk to reward. Now, if you don't know what risk to reward is, risk to reward allows you to lose trades and still be up, right? Think about going bowling and you only hit 1 out of the 10 pins and you get a strike, right? Think about going to play basketball and you shoot 10 shots, you only make 2 and you win the game. Think about literally doing anything and being the worst at it, but still winning at whatever it is that you're doing, right? That's what risk to reward allows you to do. How risk to reward works, family, is this, is it allows you to always remain profitable based on the specific ratios that we use. Now, real quick, I'm just going to explain like this. So when you're trading anything, you're risking a certain amount of money to potentially gain a certain amount of money, right? So what I want you guys to understand is there's different risk to reward ratios. Ratio just means like this. You got a 1-to-1, for example, 1-to-2, 1-to-3, and then it goes on and on and on and beyond and so far and blah, 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 blah. It keeps going, right? So 1-to-1 just means this. It means if you're risking an apple, you're gaining an apple. It means if you're risking $100, you're gaining $100. It means if you're risking $1,000, you're gaining $1,000, right? You risk 1%, you gain 1%. 1-to-2, risk an apple, gain 2, risk 1%, gain 2. It makes sense. 1-to-3, same thing. You risk $1, you make 3, you risk 1%, you gain 3. Now, what I want you guys to understand is in this trading industry, most people aren't very successful within their trading, right? They say that the average person that's trading on their own, and I'm not talking about people here in I Am Mastery Academy. I'm talking about the hundreds of thousands and millions of people that are trying to learn how to trade outside of what it is that we're doing. So the average person is going to be very low accuracy, right? So what I thought about was I said, okay, if the average person is low accuracy and they can only win 3 out of 10 trades on their own, how could they ever be possible? How could they ever possibly be profitable, right? So when I started thinking about this, I was like, damn, okay, so in this industry where people majority are losing, how can we make a strategy where even if they're losing, they're going to win? And what we did is we took this ratio out of 3 out of 10 wins, and we took 10 trades on each of these ratios. So 10 trades at 1-to-1, 10 trades 1-to-2, 10 trades 1-to-3, right? So we're going to risk 1% on each trade. So factor this in, family. Let's say you take 10 trades, you win 3, you lose 7. On a 1-to-1, you're risking 1% to gain 1%. So on the 3 wins, you're up 3%. On the 7 losses, you're down 7. The total outcome after the 10 is -4, right? Not too hot. On a 1-to-2, your wins are worth 2% instead of 1%, right? Notice how the red area is smaller than the green compared to the red being the same on this one, right? Now, what does that mean for you? It means this. It means your 3 wins give you 6%. Your 7 losses still give you -7. Your total outcome is -1. Still not too hot, right? And then you got 1-to-3. You risk 1% to gain 3. Your 3 wins, you're up 9%. Your 7 losses, you're down 7. Your total outcome is +2. Now, the cool thing about that, family, is you could be trading and you're able to maximize the amount of money you're able to make, right? Now, here's a visual representation. Let's say here's 2 different traders. Let's say here's Mandy, and let's say here this is John Guaman, right? Trader 1 is Mandy. Let's say trader 2 is John Guaman. Let's say they both fund up $200 in their account, right? $200 is a decent amount of money. That's probably the size of the amount of money you probably put in your first account. I put $200 in my first account, 2016. I probably lost that hoe in like 30 minutes too, right? We're not here to talk about that story. But yo, $200 and we got 3% risk. Let's say they both got $200 in their account. They're both going to risk 3%. Really what that means is she's going to risk $6 and John Guam is going to risk $6, right? Now, when it comes down to it, guys, what I want y'all to take away from this is this. Let's say John Guam hits this trade, right? Notice that John has a fatter stop loss, right? Let's say Mandy, she's been plugging in with Steady. She has a smaller, tighter stop loss, right? So John has a big fat stop loss. He risks his $6. He makes $24. He risks $3%. He gains 12%. Let's say Mandy, on the other hand, she risked the same $6. She made 200. She risked the same 3%, but she gained 100. Now, how is that possible, family? It's because of the risk to reward ratio, right? I'll tell you guys this. John's trading at a 1 to 4. It means whatever he's risking, he's gaining 4 times as much. Notice how this red area is 4 times smaller than this green area, right? Same thing here. Notice how the green is 32 times as big as this red. Now, what that means is 1 to 32 means that whatever she's risking, she's going to be gaining 32 times as much. So per $1 she's risking, she's getting 32 back. Per 1% she's risking, she's getting 32 back. She risks $100, she gets 3,200 back. She risks 1%, she gets 32 back, right? Now, when it comes down to it, the way we trade, because the stop loss is smaller, it means that your lot size is a lot bigger, right? Now, because your stop loss is so much bigger on the second one, it means your lot size has to be a lot smaller to cover that distance. If I want to risk $500 here and $500 here, I'd have to use a smaller lot size here and a bigger lot size here. Now, really what that means for you guys, it just means you can maximize how much money you're making. Now, when it comes down to it, here's the average earnings in the sense of risk to reward ratios. Now, really what this means is this is just basic math, right? So this is if you're 20% accurate, 30, 40, 50, 60%. Then you got 1 to 1, 1 to 2, 1 to 3, 1 to 4, 1 to 5, right? Now, at a 1 to 1, if you're not winning 60% of the trades you're taking, you're not profitable, right? Now, guys, profitable doesn't mean it doesn't mean you're up millions of dollars. It just means that you're in profit. It just means that your account is not below whatever it is you deposited, right? Now, at 1 to 2, you're not profitable unless you're 40% accurate. A 1 to 3, we already talked about it. If you're winning 30% of your trades, you're profitable. A 1 to 4, you're breaking even at 20%. A 1 to 5, you're profitable. It means you could literally lose 8 out of 10 trades and you're still up like a duck, right? And the reason why it's possible is because of the risk to reward. Now on Steady, what we do is we maximize our risk to reward. Some of these trades are really going the distance, right? Now, really quickly, how you're going to access Steady is like this. You're going to go into the IM Academy. You're going to log into your shopping cart. You're going to scroll down to the box that says Steady. You're going to check that join off, and then you're going to add it to the pack. And then that's that. So we're done with the presentation, right? So I'm going to turn this off. And now we're going to look at the charts. Y'all ready? Perfect, perfect, perfect. Let's get on the charts. Let's get on the charts. Yes. All right, lit. I hope you guys are having fun. I'm having fun with y'all today. All right, cool. So what I want to do is I'm going to go over a trade opportunity that I took last week. This is a trade that I actually sent on Steady. But before we get into all this craziness, what I want to do is I want to kind of give you guys some understanding of how it is that we look at the market, right? The way we look at the market, I honestly think it's probably one of the best ways to, I guess, just kind of look and understand the way the market moves. Because honestly, I'll tell you guys this. There's only 2 options when it comes down to trading. You know, it's either going to go up or it's going to go down. But those 2 options are like the hardest 2 options to pick. No cap, right? So when it comes down to it, how can you make that simpler on yourself? How can you make it easier for you to come into this space and really cash out and, really go crazy on a consistent basis, right? And honestly, family, the way to I guess, really just do that is it just comes through the understanding of how you look at the charts, right? So before we get on the charts, what I want you guys to understand is I don't look at the charts like this, right? I'm not looking at the candlesticks and all the wicks and all the extra stuff. All of this is hard to look at, right? What I want to do is I want to look at the overall picture. I want to look at the overall trend. I want to see where I'm really at, right? There may be people in, Mandy, they said that there might be people in the waiting room. I don't know if there is. All right, cool. Check us out. Blah, blah, blah. Let's see. I'm just trying to catch up in the chat. All right, cool. Y'all good. So, what I want you guys to understand is when we're looking at the market, we're not going to look at it like this. This is hard, right? You want to make it easy on yourself. Because honestly, when I first started trading, when I first started trading, guys, I remember, how do I say this? I remember when I looked at the charts and, I was looking at stuff. I didn't know what I was doing, whatever the case might be. And I remember Darwin Lopez. So 2016, the year's 2016. So flashback, right? Flashback to 2016. I remember Darwin is one of the people that was seeing a little bit more success than me trading at the time. And he always used to say, he said, train your eyes to see the market. He said, train your eyes to see. And when you tell me that, it pissed me the hell off. I'd be like, bro, what the hell do you mean train your eyes to see? I'm like, bro, I'm looking at the same damn thing you're looking at. I'm like, how are you going to see something different than what I'm looking at, right? And, honestly, back then, he would say that all the time. And I kid you not, it would piss me off so bad. It would make me so upset because I was just like, this guy just doesn't want to give us the stew. But in reality, he really wanted me to train my eyes to see. Now, what does train your eyes to see really mean? It means this. It means first, you got to understand the trend. Understand the trend. And if I spell something wrong, you don't got to be a genius to make money, right? So don't flame me up or anything. But he would say, you got to train your eyes to see. All right. So in my journey, I was just like, damn, okay, now I got to train my eyes to see. So understanding the trend was the first thing in the sense of training my eyes, right? So we're going to call this the training your eyes training. Cool. So this is what we're going to call this. This is the training your eyes training. So the first step is you got to understand the trend, right? So really there's two trends. There's an uptrend and then there's a downtrend, and that's it. There's a sideways market, but we don't mess with that. That's cap, right? So there's an uptrend and a downtrend. So when it came down to it, he said, start training your eyes to see. So I was like, okay, I don't know what the hell that means, but we're going to figure it out. So what I started doing was, looking at the candlesticks and everything else. This shit was honest. My bad. This was really hard to look at, right? And if I say any inappropriate words, this doesn't go live. So, it is what it is. I hope I don't offend anybody. But so when it came down to training your eyes, I was just like, damn, bro, okay, how am I supposed to train my eyes? Right. What I figured out back in like 2016, 17, what made it really easy on me was I was just like, okay, I got to train my eyes. Right. Now, what I realized was the market kind of moves in these zigzaggy patterns, right? Have any of y'all ever noticed that before? The market kind of moves in these patterns, right? So what I did was I shifted the perspective of looking at the charts like candlesticks and wicks and all the little extra stuff. And what I started to do was I started to look at it in a perspective of these zigzag type lines, right? So what I did was I figured out how the market moved. I realized that in an uptrend, the safest trades to take, so let's say this, the safest trades to take were to buy higher lows, right? So I learned that when the market's going up, you just want to buy it, right? But you want to find the key point in the market, like when to buy, if that makes sense. Hopefully that's making sense. Hopefully I'm not confusing y'all. Is that good? Let's get some nods in if that's making sense, right? So the key thing when it comes down to trading is just you figuring out when to buy or when to sell. And honestly, that's the most complex part of it too. So let's factor this in. I said, okay, the safest trade to take in an uptrend is to buy it, right? Because, sometimes people see that the market is going up and they're like, damn, this thing's just going to keep going up. I'm going to buy it here. It goes up a little bit and then it goes down. And then, you're pulling your hair out. You're praying to God. You're like, yo, God, please let me get out of this trade, bro. Like I'll fix up, whatever the case might be. So when it comes down to it, what I realized was, the safest trade to take in an uptrend was to buy higher lows, right? The reason why we buy higher lows, AKA, these are higher lows. This is a higher low. This is a higher low, right? I'm gonna label it out for you guys because I know we got some beginners on the session too. Higher low, higher low, higher low. And then we also have higher highs. I'll explain that real quick. I'm gonna do this really quick. I know this is basic, but this is what will make you I guess money, right? As long as you can understand this. So it was to buy higher lows. You know, the basic concept of trading stocks or anything is people always say buy low, sell high, whatever, right? So in the foreign exchange and cryptos, whatever, what you guys got to understand is the safest position for you to take is just to buy these higher low points, right? All the technical analysis is going to do is going to find you how it's going to teach you how to find the best possible entries to do so. In a downtrend, you're selling lower highs. That's literally it. All trading is, if I had to sum it up for you guys, is you sell lower highs and you buy higher lows. This is all trading is you're either selling a lower high or buying a higher low. That's literally it. Like literally, we could just end the training now, right? Like that's literally it. But when it came down to it, obviously the market doesn't always move so perfectly like this. When it is moving like this, you know, all you're doing is you're just going to keep buying and buying, and you're going to keep selling and selling and selling, right? So when it came down to it, what I did was I first had to shift the perspective of how I looked at it. I just started looking at it like this, right? Now, the next thing was you got to learn how to see where the market's changing direction. So, yo, this is the first trades that you guys are going to learn how to take right now. And these are going to be the trades where you're going to buy the market and it's going to go up, and then you're going to sell the market and it's going to continue down, right? Now, those are cool, but I'm going to teach you guys about my favorite trades. These are the trades that will really cash you out hundreds and hundreds and hundreds of pips, right? Y'all want to learn about like my favorite type of trade? Yes or no? Let's see what the chat's talking about. The chat's been kind of dead. We need some energy. All right, cool. Perfect. All right, cool. These are my favorite types of trades, right? Now, this is called a shift of momentum. Shift of momentum. I spelled that wrong. I put shaft. All right, cool. Shift of momentum. We said slash BOS. BOS stands for break of structure. All right, cool. These are my favorite types of trades. These are trades that really cash you out. So these are trades that when the market's going up, let's do this. These are the type of trades that when the market is going up, what we're doing is we're looking at the key points. So I'm gonna give you guys some stew right now. So this is something that I like to call a structural range, right? So take notes on this. This is a structural range from this higher low to this highest high. Whenever the market's in an uptrend, all your job is to find the last higher low and the last higher high. Once you find that, what's supposed to happen is, in theory, price should pull back and then it should go higher, right? Sometimes what happens is it puts in this new higher low, but then it fails to make a higher high, right? This high is lower than the previous high. That's your first indication it's going to shift. Now, the thing that I like to do is I like to wait for the market to break this higher low. Once it breaks this higher low, I know that it's just put in a new low, right? Now from there, what's supposed to happen is the market will pull back. It'll give you an entry, and then you start swinging it and you catch the first move after all these waves down, right? And this is one of my favorite types of trades. These are the type of trades that'll really cash you the hell out, right? And then kind of the same thing in reverse, right? Sometimes the market's going down, it's going lower, and then it has a little change of direction, break structure, pulls back, and then it starts going higher. So for me, two of my favorite trades are pretty much, you know, I guess just these. These are pretty much the same thing, but just in reverse, right? So when it comes down to it, these are two of my favorite trades. This is where you're going to get in. You'll sell it right here, and you'll buy it right here, right? I'm gonna give you guys visual representations of these two. These are some of my favorite trades. These are trades that you're really gonna get cash out on. I know we haven't gone onto the charts yet, but I'll tell you guys this. If you can understand the concept and the ideology of just the lines and the zigzags, it makes everything else a whole lot easier, right? So you know, let's keep it moving. Now we're gonna get into actual charts. So, you know, I'm going to show you guys a trade that I sent out on Steady. This was last week. This was a banger. You know, I sent out like 3 bangers last week. This was by far I guess the biggest banger, whatever you want to say. So this was CAD JPY. I sent this on November 15th, right? And just so you guys know that that's true, I'm just gonna send this to myself real quick. Cool. Because there's no cap in the wrap. Let's see. Here we go. Let me share my screen again. Cool. Y'all see this? November 15th, CAD JPY. Crazy, right? Perfect. So no cap, obviously, right? Really do this. So let's kind of get into this. Now, what I want to do is I want to start labeling out the market. So right off the rip, the first rule that I gave you guys was, training your eyes to understand the trend, right? It's either a downtrend or an uptrend. So right off the rip, what I'm seeing is that this is going down and down and down. So what I'm going to do is I'm going to put the replay tool on. Now, what I'm looking for is the overall zigzags. Now, what you can do to make it easier for yourself is just come through and draw these little dots. So here's the high, there's the low, here's a lower high, here's a lower low, here's a lower high, lower low. These are about the same. So I'm going to say this is a lower high. We can say that this is a low. Here's a lower high. And then, you can get really nitpicky with all these little ones. But for me, I'm just looking at the overall, bigger picture. So for me, there was the lower high and this was the lowest low, right? Now, when it comes down to it, when I was a beginner trader, this made it easy for me to see, right? Remember, training your eyes to see, right? So when it comes down to it, now I'm looking at the overall structure of the market. I can kind of see the zigzags a little bit more in depth, right? Y'all see that? Perfect. So that's how you want to start seeing the charts. When you start seeing the charts in that way, it makes it a lot easier for you to kind of understand, okay, this is going down, this is going up. What should I be looking at? What should I be doing? Et cetera, et cetera, et cetera, right? Now, when it comes down to it, I'm going to delete this just for the time being. Now, what I want you guys to understand is when it came down to this specific area of price, what I was looking for was the overall wave. I seen that the market was going from this high down to this low, right? In my eyes, even though there's like a trend inside this trend and, it's doing this right here, in my eyes, this was a one move straight down, right? On the 1 hour, it's a little choppy, but on the 4 hour, it looks like a straight move down, right? So my thought process, I'm like, okay, I seen this going down, right? So, what I'm thinking in my mindset is okay, it just put in a low. Now it needs to put in a lower high. Now I didn't sell this here, right? I didn't see this until after this happened. But the thing is I always start marking up the chart way previous to where it's currently at, just so I can have an understanding of the story or the timeline or whatever you want to say, right? Now, real quick, I'm just gonna pull up the chat. I'm seeing y'all going blah, 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 breakthroughs. Cool. So now what I'm seeing is I'm seeing the market go down, right? Now, when it pulls back, I'm looking for a few different things. The first thing that I saw in this specific market was this. Is there something that we like to call liquidity, right? So we'll call this liquidity. Am I spelling this right? Liquidity. All right, it doesn't matter. If it's wrong, it's wrong. It doesn't matter. You guys get what's good. So the way we mark off liquidities, I like to draw these little X's, right? You could draw whatever makes you happy. Now, what liquidity means is this, is people's money, your stop loss and your buy stops, sell stops, right? So this is what liquidity means. So what I want you guys to understand, liquidity is just above any old high that hasn't been taken out or below any old low that hasn't been taken out, right? So what that means is that above every high, there's liquidity and that the market hasn't like come back and cleared. So let's just say that this hasn't happened yet. Let's say that we're right here. Well, what we can factor in is that there's liquidity above this high. There's liquidity above this high and here and here and there and so on and so forth, right? Liquidity just means where people are putting their stop losses, right? Now, I'll explain this to you guys. Basic Forex education talks about support and resistance, right? Y'all familiar with support and resistance? Y'all heard about that before? Let's put a one in the chat if you've heard of support and resistance. Okay. So support and resistance is cap, right? So support and resistance is cap. If you don't know what cap is it's fake, it's false, it's nonfiction, it's not facts, right? It's cap. So when it comes down to it, what I want y'all to factor in is this: is the basic Forex education that's out there. They teach us about support and resistance, right? They teach us that support is they teach you that the support is the floor in the market, resistance is the roof, and that once you find a floor, you want to buy the floor and put your stop loss below, right? So they tell you to buy the floor, and then they grab your stop loss, and then they move the market the other way, right? I'm talking about the banks and the hedge funds and, et cetera, et cetera, et cetera. I'm not going to get too into, the trading cash flow quadrant today, but there's liquidity. All liquidity really means is factor this in. Let's say above these highs, we'll change this to, let's just say this color and this, and then we'll put stop loss / buy stops, right? Now, this is where people are putting their stop losses and their buy stops, right? Now, so I'll tell you guys this. Basic Forex education is a scam because we're getting informed wrong information about where to put our entries, where to put our stop losses. And it's like me telling you to put your stop loss where I know it's going to get hit, so I can take your money, if that makes sense. That's how the banks kind of play this, right? So the basic stuff is teaching you wishy-washy information. Yeah, smart money trading is how the banks trade, bro. That's facts. Yeah, facts. So in the real geniuses, right? The real geniuses, hopefully y'all see my camera. The real geniuses that are trading, they put their buy stops above previous highs, right? They're not geniuses. That's honestly the dumbest, dumb thing you can do, right? We don't do that. Now, let's factor this in. When the market starts moving, what happens is this: is let's say this candle specifically, right? Maybe people are looking at the market and they're thinking, hey, the market's coming up, it went down, it's coming back up right here. Maybe I should sell this here because it looks like a double top, it looks like an M, it looks like whatever. And you guys are all seen like these M shapes, these double bottoms, these whatever, double tops, double bottoms. So all the basic traders in the world, they're seeing these patterns. They're like, okay, well, my favorite trader said to sell when it comes back up to this point. So they know that all the dumb people, not dumb, but they know that all the people that are blindly following each other are going to trade in the same type of area. So your favorite trader says, hey, double top, let's sell. You sell. And what happens is when you sell, they pump the market up and they hit your stop loss, right? Let's say your stop loss is over here, right? All the liquidity, not just you, but everybody, all the money is stuck over here, right? Say everybody's money is over here. What they do is they pump the market. So this is what we like to call an institutional candle. We call these candles buy to sell candles. And I'm talking about this candle right here, this big bullish one. This is what I like to call a buy to sell candle, right? Now, what happens is theoretically these banks, they come in and they inject millions of dollars worth of pressure into the market. So let's say they buy 1 million lots, right? You think a 10 lot is big. Yo, right now, I'm in a little bit of drawdown, right? I'm in a trade right now, and I'm in the slightest bit of drawdown, right? But I'm in a 17 lot right now, right? And I think that's big, right? Now, when it comes down to it, these guys, they're trading, let's say millions of lots, right? I'm trading with 17 lots. 17 lots, I'm making 170 a pip, or I'm losing 170 a pip, right? So, somebody already said it before I did. They said that it takes 10,000 lots to move the market 1 pip. Yeah. So what you guys have to understand is when they put this buying pressure in the market, they pump it up. Now, when they pump it up, they come to hit your stop losses. Now, once your stop loss is hit, they collect all your money and then they're going to dump that into their next trade, right? They're dumping that into their next trade, right? So they buy to sell, right? Everybody say buy to sell. You don't have to type it in, just say it out loud. Cool. Buy to sell, right? Now, when it comes down to it, let's say right here, they sell let's say they sell 6 million lots. 6 million lots, right? Now, what I want you guys to understand is that, you know, if you have unlimited amounts of money, you're going to mess up the natural flow of the market. You know, the market's supposed to naturally flow like this. It's supposed to go up like this. It's supposed to go down like this, right? There's a natural flow. Now, if you just put in millions of dollars and billions of dollars worth of pressure, instead of flowing like this, it's going to go like this. And then it's going to go like that. And if that happens, then it messes up the natural flow of how the market works, right? There's a natural flow of how things are supposed to work. It's a natural flow of how things are supposed to go, right? So check this out. This is GBP AUD on Aud Usd data feed. So this is a daily time frame. And I'm going to show you guys an example what happens when they don't buy to sell. So here's a wick on the daily time frame. This is 1,000 pips and probably in 1 minute on the daily time frame. Now, this is what happens when you buy millions of dollars of pressure and you don't sell, or you don't have that pressure to equal them out. I can't explain that better than to have pressure on both sides. Hopefully that makes sense, right? There's another one too. This one's even more crazy. This is a 2,000 pip spike in 1 minute on the daily time frame. This is what happens when the broker is giving you bad quotes, right? Now, let's get back into this. So when they buy to sell, what happens is this buy could be up hundreds of thousands, millions of dollars. Now, when they sell, they have to actually hold that buy so they can hedge their position. Hedge means they buy and sell at the same time. So as the sell goes into profit, that buy goes into drawdown, right? Now, they can sacrifice that buy because they got unlimited amounts of money, right? Now, what we see is we see that the market made a low, it made a lower high, it came back down, and it made another low, right? Now, we like to call these areas equal lows, right? Equal lows really just means that, sheesh, how do you say this? Equal lows really just means that, you know, below every low that hasn't been taken out, there's money, right? Now, see how this is a low point right here? Let's zoom in. I'm going to teach you guys something about equal lows and equal highs. Yo, so some people teach you this wrong. I'm going to teach you it the right way. So this is the lowest point. There's liquidity below. This was the next lowest point. There was liquidity here, but then it spiked it out. It went lower. There's actually nothing there. There's liquidity here. So pretty much under these two areas, there's people's money that's sitting down here, right? So what that does is that tells me that this is a downside target, right? Now, following, I guess, just what we're doing, we have this institutional candle, right? What I like to do is I like to measure these institutional candles from the open to the close of the body. And what that does is when I measure it out, it gives me this 50%, right? Now, this tool that I just used, it's called the GAN box, GANN box. Here's the settings. I'm gonna give y'all a second. Y'all can take a screenshot, whatever, et cetera, et cetera, et cetera. Do what you want. Cool. So we're gonna keep it moving. So when it comes down to it, you know, since this is a candle where the banks are coming into the market, we don't know exactly where they're coming in. So we like to take the rough average or the equilibrium or the median point. We like to take this 50%. We like to take our trades right here, just because you know, this is like the rough average of where price meets, right? Now, when it came down to this trade, what we were looking for was we were trying to see the market make a play lower, right? The last thing we did was we took the fib from the high down to the low, right? If you guys don't know what the Fibonacci is, the Fibonacci is just designed to measure the market, right? You're only going to use a fib in a trending market. So when the market is going down, real quick, when the market is going up, you're taking your fib from the high, from the low to the high. And what the fib is designed to do is it's designed to give you the area where the market should pull back to for you to get in, and then it should go higher, right? Real quick, here's the fib settings. I'm gonna leave that up for like 30 seconds. Cool. So that's the fib settings, right? Now, when it comes down to it, that's that. In a downtrend, same thing. You take the fib from the lower high down to the lower low. And what the fib is designed to do is it's designed to tell you where potentially the next lower high is going to be before the market goes lower, right? So when it comes down to it, when we're looking at the fib, here's the secret. Here's the secret. Y'all ready? Perfect. Yo, all you're going to do is once you draw your fib, draw a box from the 61.8 to the 88.6 like this. And then you're going to pick up the box and you're just going to move it to the left, right? You're going to look left and you're going to trade right, right? That's a nugget. Write that down. Look left, trade right. Look left, trade right. Look left, trade right. Look left, trade right. What that means? It means that you're going to look in this box from the 88.6 to the 61.8. You're going to find some institutional plays. If you don't really know much about institutional candles or whatever, tap in with me on Go Live. We'll get you right, right? But you're going to make the box, take it to the left, find a reason, find an institutional candle, whatever. For us, it's already right here, right? Now, I sent out a pending order on this right here. Stop loss was like 16 pips, 15 pips. And then our take profit was this negative 27. Excuse me. Now, I guess let's just watch what happens. Cool. So, it's coming down, it's going up, it's doing the dance, whatever. It's going up, it's going up, it's going up. Eventually it gets there. All right, it's going, it gets close, it barely misses it. And then it eventually comes back. Come on. Cool. There's our entry, right? And then from there, we see this thing start going down and down and down. And this thing just went all the way down to hell, right? And then, eventually it got to where we needed it to go to, right? Eventually it got to where we needed it to go to, right? Beautiful, beautiful plays. And then now we're at where we're at now, right? Now, what I want y'all to take away from that was this trade was a 1 to 9 risk to reward, right? So what does that mean to you? It means that whatever you risked on this trade, you're going to be able to make 9 times as much, right? Now, the beautiful thing about that, being able to make 9 times as much as whatever you're risking, is you're able to maximize your trades that you win. And when you lose, it's a small loss. We can all agree that this red area is very tiny in comparison to the green, right? Now, I mean, it's always kind of happening, right? Sheesh, it's not right here. Let me see this. Yo, like 2 weeks ago, maybe 3 weeks ago, 2 weeks ago, 3 weeks ago, whatever it was. Yo, I sent out this trade on GBP USD, right? On Steady, you're not going to get a ton of trades from me. The trades you do get, they're doing the dance, right? Now, I'm looking at something right now, but it's what do you call it? It's Thanksgiving week. The market's slow. The dollar's kind of moving weird, whatever. Let's see. I'm looking at Sensei CJ. I got that marked up too. That's crazy. You just sent that. I got that too. So whoever sent that, you're definitely doing something right. I don't know who that is, but you're doing something right. Congrats. Let's keep going. Let's keep going. Where was I at? Dang, bro. CJ, you threw me off, bro. I gotta remember where we were at. Let's see. So I'm looking at something right now. And I'm gonna break it down. I'm gonna break down why it is that we're looking at this. So cool. So what I saw on this is NZD USD. Now the dollar index is just looking like trash. The dollar right now is just moving up and up and up and up. So I was gonna send this on Steady. but I just don't like the way that the market is moving this week. So I'm just like, I took it myself. I'll keep it a buck with you guys too. I'm down like 1,300 on this joint right now. I'm risking like $4,000 to make $20,000, right? But that's a good risk to reward, right? I'm risking 4,000 to make 20,000, right? I could risk 4,000. The goal, if this swings, is it's to make 4,000. It's risk 4,000 to make like 60. Now I don't know if that's actually gonna happen, but I'm gonna explain why. Yeah, a little 20 piece, right? A little 20 piece. But I'm gonna explain what we're looking at. Now I don't know if this is actually gonna play out the way I want it to play out, but I'm gonna explain it to you guys regardless. It's not looking too hot right now. If we keep it a buck, it's not looking too hot right now. But right now, I saw on the 4-hour, there was this last candle down before this move up, right? Now, and the reason why it's not necessarily playing out the way I want it to right now is just because of the market conditions. Sometimes there's conditions that we can't even really do anything about, right? Now, what I saw was on this 1-hour time frame, I saw that there was this last candle down before this move up, right? This was the last candle down, and this started this huge move up, right? So, and the way I'm thinking about this is this. This was the sell to buy candle. They sold here to then buy, right? So what we do is we take our entry, we put it there, and then, we put our stop loss right here below the thing. My stop loss is a little bit lower than that. It's at, oh my God. Oh my God. All right. My stop loss is right here. So when it comes down to it, this is a sell to buy candle, right? Now, the next thing I want y'all to factor in is this market was going down for a very long time. And then we had a very big move to the upside, right? We had this big wave up, right? 366 pips, right? We had a very big retracement. And then right after that retracement, we have what I like to call a measured move, right? If you're taking notes, write that down. Measured move. Measured move means this. It means that this market moved up 366 pips. So what I do is I copy and paste it, right? And the next move should be equal to the previous move. Y'all see that? Y'all see how they're both the same size? Crazy, right? Mind blowing. Wow. When I first saw this shit, I was like, damn, Darwin was right. You got to train your eyes to see, right? But jokes aside, so that was the thing. So then I was just like, okay, well, the pullbacks kind of work the same way. This market's kind of pulled back into this zone now, right? Now it's kind of into this area where I'm looking to kind of take it. So when it comes down to it, what should happen next? Joint should make another big move up, right? It only makes sense. Makes sense, right? I see some of y'all like, wow, shaking your head, right? Yeah, I love it. I love to see that. That's honestly the funniest thing. I'm honestly not trying to like crack up, but yeah, I love y'all. This is great. So check this out. So when it comes down to it, I'm only down 4 pips. It's not too bad, right? But this is a trade where I'm risking 20 pips. Oh, and then the last thing, we'll just throw a fib on there. Fib's always this, nice extra confirmation. So we'll throw the fib. Now, when we throw the fib, we want to de-extend. We want to de-extend a little bit higher, right? So, it targets the negative 27. If this thing can actually go, we got a good trade on our hands. Even coming back up here, we got what I like to call equal highs. This high is higher than this high, but they're right around the same price. So that's like a nice little move. This is a 1 to 14 right now, right? Now, I'm going to tell you guys this. I'm not sending this on steady. If you take this, that's on you. I'm down right now. I'm taking the risk on this. I'm not saying to take it. I'm not going to send this one on steady. And it's not that I don't believe in myself, because I believe in myself more than anything else. But it's just, I don't like the conditions of the market. I'm taking this just because I'm like, this is the only thing that I've seen all week, right? But I don't like the fact that this shit just keeps going up. So when it comes down to it, pardon my language once again, but that's the thought process, right? So, it's up to you. It's up to you. Whatever you do, but this is kind of the way that I'm looking at this market, right? Now, if it plays out, it plays out. We cash out big. If it doesn't, small loss. And we're good, right? So right now, this trade is it's a one to well, actually, this is wrong. What the heck? This is, whoa, hold on. This is wrong. So right now, this trade is this trade right now is a 1 to 19, right? So potentially whatever you risk, honestly, it's a little bit better. Right now, from the entry, it's only a 15 pip stop loss. What I want you guys to understand is it's a small risk for a big win, right? So it's a 1 to 25. 1 to 25 means whatever you risk, you potentially make 25. Now, this is a swing. It might take a long ass time for it to go up there, right? So, just kind of factor that in. But guys, when it comes down to it, it's kind of just, what it is that I guess I'm looking for right now in the market. It's honestly not looking too hot for me right now, right? No cap. But we're good. We're gonna see what's good. We're gonna see what's popping. But honestly, guys, it's 11:05. I don't know if y'all are tired or not. Are y'all good? Like, are y'all trying to keep going? Are y'all done? Can we call it? Like, what's the vibes? What's the vibes? What y'all want? You want me to keep going? Outside, we on the West Coast. Hey man, we're in the middle of the world over here. Okay, cool. We'll look at maybe like a few more things. Honestly, there's really not anything to look at. The market just kind of looks it's kind of looks shitty for the most part. Kind of just looks shitty. Let me see. I could just like quick little moves real quick. That all looks terrible. No. Trying to, so obviously I'm going through these fast, but I've trained my eyes to see. So it's just like, I could just look at something real quick and I could determine if there's something worth our time there or not. I guess this is the only other thing. This is AUD USD. So same thing. Here's that last candle up. This is the institutional candle. It went up and then it dropped, right? This is a trade where, it's only a 9 pip stop and a 57 pip take profit. This is a 1 to 6. Catch a screenshot, catch whatever y'all want to do, whatever the case might be. But honestly, guys, somebody said, please, we in Hawaii. I'm dead. Let's see. Cool. Honestly, I'd rather just do this. We could do some Q&A type thing. Somebody said EG 30 minutes. Okay. Are you talking about this? Are you trying to sell something up here? What are you doing? The buy. Yeah. I like to wait for like safer trades. I like to see if it broke up above this, then it's changing directions. Right now, this is the lower high and this is the lower low. In theory, it should go up and go lower, right? But if it breaks up above this point, right? If it breaks up above this point and then it pulls back into this candle, then there's a reason to kind of get in. I wouldn't just buy from here without like a structure break, if that makes sense. But I would say like, real quick, if anybody has any questions, maybe we could do like a few minutes of Q&A and then we can call it. Somebody said, would you say bounce back could work hand in hand with steady? Yeah. 100%. I mean, bounce back and steady are pretty much very similar. I feel like bounce back's a little bit more of like education. Steady is more so like, I guess just taking trades, my perspective, right? How to do RR on cryptos. I mean, it works the same way. I'll give you an example. I took a Bitcoin trade. This Bitcoin trade was crazy. So on Bitcoin, this was the last candle up before this big move down. On this big move down, it broke the structure on Bitcoin. Bitcoin was had higher low, higher high, higher low, higher high, higher low, higher high, right? And then we had a big shift down. So when we had this big shift down, we broke past this low and we broke past this low, right? So in my mind, this was that last candle up. It went above this previous high and then it had a big aggressive move down. Right after this candle, we had another one. So I kind of took the average of the two of them. What I was able to do is I was able to find this last candle up before this big move down. price came literally right to that 50%, right? So, you know, when it comes down to it, you can have phenomenal risk to reward trades on crypto too. And this style of trading works literally on everything, right? I mean, this was a 3,000 pip move, but this could have been a 1 to 16 risk to reward. And honestly, if you're a little bit more aggressive, it could have been like even more, like 1 to 20, 1 to whatever. What are some ways to increase your accuracy? I guess just really understanding what the chart is showing you, because you don't want to just go onto any random candle and say, okay, this is my institutional candle right here, and then buy it and then get clapped, right? You want to really understand I guess the attributes. Like, this is a big body candle that started an aggressive move down. Like, why did this candle push up to then go aggressively down? You got to I guess you got to just ask questions. You got to learn about the attributes of them, right? How do you enter trades? Because I be winning trades, but either I get stopped out fast or poor entry. How do you get entries? Why? I mean, you enter off of these institutional candles, bro. And you know, you can learn more about that on Steady. But I'm gonna answer like maybe 1 or 2 more. And honestly, I gotta wake up early for this European call I'm about to do. Appreciate you. Cool. If anybody has any last questions, if not, I'm gonna pass it back to Mandy. Thank you. All right, cool. Yo, here's the biggest thing. Yo, no cap. The biggest nugget I'm gonna give y'all right now. I really need y'all to be in tune with me right now, right? Here's the biggest nugget I'm gonna give y'all. If you really want to be successful trading, if you want to go crazy in your trades, if you want your trades to smack and hit, right? The key for you to becoming a successful trader is this. Y'all ready? You got to follow me on Instagram, right? And then don't send any money to fake accounts. But yo, with that being said, I appreciate y'all. Love y'all. Hope you guys have a beautiful rest of your night. I'm gonna pass it back to Mandy, and I'm gonna see y'all soon. Peace.
Awesome, guys. Can we drop some 7s in the chat for Justin? We really appreciate you. And guys, just go ahead and follow him on Instagram, show him some love, and take what he taught you and apply it. I hope you guys have an amazing night. I'm gonna talk to you guys soon. Peace.